service tax. So firstly, we should know the meaning of service tax. Service tax is a form of indirect tax imposed on specified services called taxable services. Service tax cannot be levied on any service which is not included in the list of taxable services. Over the past few years, service tax has been expanded to cover new services. The objective behind levying service tax is to reduce the degree of intensity of taxation on manufacturing and trade without forcing the government to compromise on the revenue needs. The intention of the government is to gradually increase the list of taxable services until most services fall within the scope of service tax. For the purpose of levying service tax, the value of any taxable service should be the gross amount charged by the service provider for the service rendered by him. Service tax was first brought into force with effect from 1st July 1994. All service providers in India except those in the state of Jammu and Kashmir are required to pay a service tax in India. Section 65A gives classification of taxable services, which are: classification of taxable services shall be determined according to the terms of the subclauses 105 of Section 65. When for any reason a taxable service is prima facie classifiable under two or more subclauses of Clause 105 of Section 65, classification shall be effected as: the subclause which provides the most specific description shall be preferred to subclauses providing a more general description. Composite services consisting of a combination of different services which cannot be classified in the manner specified in Clause A shall be classified as if they consisted of a service which gives them their essential character, insofar as this criteria is applicable. When a service cannot be classified in the manner specified in Clause A or Clause B, it shall be classified under the subclause, which occurs first among subclauses which equally merits consideration. The Department of Director General Service Tax was created in 1997 to handle the huge workload resulting due to the increasing importance of service tax. The Director General Service Tax is in charge of the department, and his role and authority are: ensure the formation of efficient establishment and infrastructure under various central excise commission rates to monitor the collection and assessment of service tax; to evaluate the workforce needed for proper and effective execution of service tax; to create a database for the collection of service tax and to observe the revenue collection from service tax; to look into the proper functioning of service tax cells and perform any other function as would be required from time to time. Presently, there are 65 central excise commissionerates and 6 service tax commissionerates within the jurisdiction of 23 central excise zones. The 6 service tax commissionerates have been established in Mumbai, Delhi, Kolkata, Chennai, Ahmedabad and Bengal. After studying this lesson, you should be able to: Section 65A of Chapter 5 of the Finance Act 1994, the functions and powers of Director General of Service Tax; rectification of mistake; challenges ahead before the Service Tax Administration in India; electronic tax administration; audit and inspections. Now let's discuss existing scheme for levy, assessment and collection of service tax in India. Service tax is levied on specified taxable services, and the responsibility of payment of the tax is cast on the service provider. System of self-assessment of service tax returns by service tax assessees has been introduced with effective from 1st April 2001. The jurisdictional superintendent of central excise is authorized to cross-verify the correctness of self-assessed returns. Tax returns are expected to be filed half-yearly. Central Excise Officers are authorized to conduct surveys to bring the prospective service tax assessees under the tax net. Directorate of Service Tax at Mumbai oversees the activities at the field level for technical and policy level coordination. The service available under its legal provision are telephone, stockbroker and general insurance, advertising agencies, courier agencies, radio pager services, consulting engineers, custom house agents, steamer agents, clearing and forwarding agents, air travel agents, tour operators, rent-a-cab operators, manpower recruitment agency, and mandap keepers, etc. Service tax is administered by the Central Excise Commissionerates working under the Central Board of Excise and Customs, Department of Revenue, Minister of Finance, Government of India. The unique feature of service tax is reliance on collection of tax, primarily through voluntary compliance. Government has from the very beginning adopted a flexible approach concerning service tax administration so that the assessees and the general public gain faith and trust in the tax measure, so that voluntary tax compliance, one of the avowed objectives of the Citizens' Charter, is achieved. Substantive and procedural liberalization measures adopted over the years for this purpose are clear manifestations of the above approach. Following are some of the measures adopted in that direction. Corporate assessees are given the liberty to pay tax on the value of taxable service provided by them in a month by the 25th of the following month to enable them to finalize the accounts. Further, the individual assessees are required to pay the levy only once in a quarter. The process of registration of assessees has been considerably simplified. No separate accounts have been prescribed for the purposes of service tax. It has been provided that accounts being maintained by the assessees under any other law in force would be sufficient. This has placed the department at considerable inconvenience to itself so as to minimize difficulties for the assessees. The Finance Act 2001 has introduced self-assessment for service tax returns, thereby sparing the assessees from the rigors of routine scrutiny and assessment. Frequency of filing the returns is minimized. Filing of the statutory return has been made half-yearly and by the 25th of the month following the half-year. This is in replacement of the monthly or quarterly returns prescribed earlier. Service Tax Credit Rules 2002 have been replaced by the CENVAT Credit Rules 2004, introduced by the Finance Act 2004, whereunder CENVAT credit has been extended across the sectors, that is goods and services. Now let's discuss rectification of mistake. With a view to rectifying any mistake apparent from the record, the Central Excise Officer may, within 2 years of the date on which such order was passed, amend the order. Where any matter has been considered and decided in any processing by way of appeal or revision relating to an order referred to in subsection 1, the Central Excise Officer passing order may, notwithstanding anything contained in any law for the time being in force, amend the order under that subsection in relation to any matter other than that matter which has been so considered and decided. Subject to the other provisions of this section, the Central Excise Officer concerned may make an amendment under subsection 1 of his own motion. An amendment which has the effect of enhancing an assessment or reducing a refund or otherwise increasing the liability of the assessee shall not be made under this section unless the Central Excise Officer concerned has given notice to the assessee of his intention so to do and has allowed the assessee a reasonable opportunity of being heard. Where an amendment is made under this section, an order shall be passed in writing by the Central Excise Officer concerned. Now before we go further, let's discuss the service tax administration in India. It can be studied under 4 heads. Challenges before the Service Tax Administration in India. Electronic Tax Administration, SENVAT, Audit and Inspections. Challenges before Service Tax Administration in India are: it is expected that in due course, service tax would reduce the tax burden on international trade, customs duty and domestic manufacturing sector, excise duty. So a planned growth of service tax would be commensurate with the goals of economic liberalization and globalization. This process requires levy of taxes on new services without substantial rise in the rate or cost of collection. The administration of service tax requires a separate, comprehensive legislation along with distinct administrative machinery exclusively devoted to the collection of service tax. The twin goal of revenue maximization introduction of the culture of voluntary tax compliance also throws up major challenge before the service tax administration in the country. Electronic tax administration. This may be called electronic payment of tax. This system envisages the facility for online registration, payment of tax, filing of returns, assessment, etc. for better tax administration and reducing the officer-assessee interface. Directorate of the Systems has worked out the framework for computerization of service tax administration with the help of NIC. They have introduced software program for allotment of service tax payer code number SAPS and service tax revenue monitoring system STREMS, which are used for registration of assessees and filing of ST3 returns. Initially, this facility has been extended to only select class or group of service tax providers for services falling under categories like telegraph, telephone, insurance, advertising, courier, stockbroking services. SENVAT. SENVAT, Central Value Added Tax, has its origin in the system of VAT, Value Added Tax, which is common in West European countries. MODVAT, Modified Value Added Tax, was introduced in India in 1986 and was renamed as SENVAT on 1st April 2000. The SENVAT scheme is principally based on system of granting credit of duty paid on input and input services. A manufacturer or service provider has to pay excise duty and service tax as per normal procedure on the basis of assessable value, which is mainly based on selling price. However, he gets credit for duty paid on inputs and service tax paid on input services. Thus, he actually pays amount equal to duty or service tax as shown in invoice less the SENVAT credit available to him. Proviso to Rule 1, Part 2 of SENVAT credit rules provides that provisions relating to ailment and utilization of credit of service tax shall not apply to the state of Jammu and Kashmir. Last is audit and inspection. Directorate of Service Tax conducts inspections of service tax work in central excise commissionerates all over the country. Inspections in the past have prompted the commissionerates to streamline the service tax administration system and to conduct surveys to register all prospective assessees under the tax net. Commissionerates have also been directed to conduct the internal audit of assessees' records as per the instructions of the board. This audit drive has resulted in the augmentation of revenue. A few commissionerates have taken up this work seriously and shown commendable results. Some commissionerates have certainly lagged behind in the field of survey work. Survey efforts are adversely affected due to non-deployment of adequate manpower and other resources such as vehicles, etc. It is necessary that all available resources and efforts are mobilized by the field formations to register all assessees for optimum service tax realization. The Director General of Audit, Central Board of Excise and Customs, New Delhi, has published Service Tax Audit Manual 2003 on 1st October 2003, containing the entire procedure to be followed by the officers of the department while conducting audit of the service. Now let's discuss Provisions of input tax credit. Input tax is the tax that is taxable person has paid on his business purchases. Section 13 of the Punjab VAT Act 2005 deals with input tax credit. The system of credit on input tax paid is tax-based. It is a major check on leakage of tax. Input tax includes tax paid on purchases of raw material, goods purchased for resale, purchase of capital goods such as machinery or equipment for use in business, tools and accessories used in business, packing material for resale and use in manufacture. Input tax credit is available only on purchases made from taxable persons holding VAT registration number in the state. Input tax credit can be claimed only by a taxable person holding VAT registration number on the basis of original VAT invoice received from seller. If a taxable person is making taxable and tax-free sales, he would be entitled to claim input tax proportionate to his taxable sales using the following formula: A into B divided by C, where A is equal to total amount of input tax for the period, B equals to total value of taxable sales for a period including zero-rated sales excluding VAT, C equals to total value of sales including tax-free sales excluding VAT. A taxable person can claim input tax credit with return for each tax period if the claim for input tax credit exceeds the amount of output tax in that return. Input tax credit shall be carried forward to the next return period. The net tax payable by a VAT dealer claiming input tax credit shall be output tax minus input tax equals to net tax. Input tax credit is non-transferable, that is, it cannot be transferred from one taxable person to another. Now let us check if we have understood the various concepts discussed in this lesson clearly. Service tax cannot be levied on any service which is not included in the list of taxable services. Right or wrong? Right. The Department of Director General Service Tax was created in 1990 to handle the huge workload resulting due to the increasing importance of service tax. Right or wrong? Wrong. The twin goal of revenue maximization introduction of the culture of voluntary tax compliance is a challenge for service tax administration in India. Right or wrong? Right. Now let's revise what we have studied till now. Service tax is a tax levied on services rendered by a person, and the responsibility of payment of the tax is cast on the service provider. It is an indirect tax as it can be recovered from the service receiver by the service provider in course of his business transactions. Service tax was introduced in India in 1994 by Chapter 5 of the Finance Act 1994. The Finance Act extends the levy of service tax to the whole of India except the state of Jammu and Kashmir. The Central Board of Excise and Customs (CBEC) under the Department of Revenue in the Ministry of Finance deals with the task of formulation of policy concerning levy and collection of service tax. In exercise of the powers conferred, the central government makes service tax rules for the purpose of the assessment and collection of service tax. The service tax is being administered by various central excise commissionerates working under the Central Board of Excise and Customs. The Indian service tax law has been ever evolving since its introduction in 1994. In addition, the legislation has also undergone changes with respect to export of service rules and import of service rules, leading to a substantial increase in the legislative provisions